Hello, this is Pro Forma 24, or my name is Guillermo, and meeting with me is my good old trusty pal, John at Options Trading Pilot. So we're going to get together because this is a big week. We have this big war. Things are happening. Before we start, subscribe, like us, come join us at optionstradingpilot.com. Join our Discord group. We talk all day. We go through things all day. We look at market structure. We look at trades. We look at the economy. And John, a couple words?
Yeah. Hey, Guillermo. It's good to finally be together again. We like you said, we do trade all day. We help people, teach people how to trade stock options, commodities, futures, cryptocurrencies. And we do it we trade it. We teach people how to trade. We try to be as mechanical as we can be, based on different rules, looking at delta and gamma and other things. But yeah, it's been a crazy couple weeks, crazy year actually, and I'm really happy that I think, like you, Guillermo, we're mostly in cash. But of course, I'm always looking to optimize my returns. So, I mean, we've been short on some things. We've taken some great gains out of the market, but we're way off again tonight. It looks like it's recovered some, but you know, we're off. It looks like at least a couple percent.
Yeah.
S&P down several handles. Crude's up about $5.
It sure is.
US dollar looks to be up as well, kind of the safe place to be, kind of a place to hide in the world. Before we got on, I was looking at the ruble. It was trading at, now, you know, nobody trades the ruble really, but it was trading at 84 rubles to the dollar. Now it's 116 rubles. So it's their devaluation of about 35% or so in, well, 5 trading days, you know, so about last week, you know, and today. So quite an amazing thing to see the war. And I think it's, from a humanitarian standpoint, it's disastrous for the people and for Putin as well. There's really no good reason why he's doing what he's doing. But I think our problems, and I'd like to get your opinion on that, Guillermo, is our problems are a lot bigger than a war on the other side of the world. I think we have a lot of issues with debt levels, inflation, and this shakeout to me feels just like the beginning. You know, the war is maybe a little bit of a distraction, and maybe it's bringing the whole world together against Russia. And so people are not so focused on Republican or Democrat or left or right or this or that, and they're just kind of like anti-Russia now. So maybe that's a positive thing, but it does feel, the market just feels very weak to me.
Yeah. I think you're really on point. You know, I did that video on Friday and talked about the similarities of what we saw the markets do in 2020. 2020 is like kind of a self-imposed, for lack of a better kind of framing on that, of like a downturn in the market. Now what we're seeing are things that are repercussions of that decision, right? We enjoyed the remainder of 2020 post March of 2020 was phenomenal, right? Like we had some really nice returns, right, John?
That was a
really good time. 2021, same thing, right? Fun times. But man, you and I both, right? It's like we feel a little bit beat up the last 2 months or so, but yeah, we're mostly cash and I still feel beat up, right? You know, if you're looking at this chart, John, look at this candle here. Look at this candle. And yeah, and there were somewhat trending markets, but some of them was a heavy down, heavy up day with you not trusting it. You know, I wasn't trusting it, so I can't trade heavy on something I don't trust. So yeah, you're talking about kind of like fundamentally, right? Economically, we're at. So, you know, for a new viewer, some of you have listened to us before, but for a new viewers, here's the resistance without the war, right? Heavy debt, right? It's like we're, you know, the last number I saw, let me see if I remember, it was like 23 trillion FRED M2 money supply. Let's see what the FRED has for us. It's always good to take a look at the actual numbers. I mean, look where we are over here, 21.84 trillion dollars in January. And look how it just keeps rising. You know, this was always my question, John, why gold wasn't going up. You know, it's like if you looked at gold, which is supposed to be kind of a haven for inflation, this was gold. Let's see over the last 10 years, let's see over the last 20 years. Look, just up 2015. Let's do GLD because it is a little bit better framing. So this is 2013, and we just barely hit where we were. But when you compare it to the money supply, it doesn't jive, does it?
Well, it doesn't. And you can look at, well, almost any commodity across the board that we trade a lot of, right? Soy, corn, wheat, coffee that we don't trade, but you can look at any of those. And commodities, agricultural, everything across the board is up significantly, but gold is not. And it has been very volatile. It was way up, then way up on Thursday, way down on Friday. Today it's up. I think it's up. It was up quite a bit earlier today.
Yeah, it is up 1.49%, which that's a big move for gold. It's at 1915. And
yeah,
I think
so it's up. Yeah, 26 points on the forward month. Dollars. So that's a lot. But I mean, I look at stocks like you and I were talking about this the other day. I have to be careful because there's stocks that I really like,
right,
that are great technology, and I feel them right now is almost like on sale because you haven't seen these prices forever, but then they keep going lower.
right.
You know, look at NVIDIA. You know, that's a good example.
I mean, you're talking my heart, right? You know how much I love NVIDIA.
And the technology is great, but
yeah.
you know, even the longer term things like SPCE.
Yeah, correct.
You know, that's under 10 or right around 10.
Yeah, incredible. I mean, NVIDIA hit 46 and it's sitting at 241, and just recently it was at 208 until like Thursday or something like that, and then just jumped up, right? So it's really an interesting time, John. You know, it's like what you're saying is that there's all this resistance. We have way too much currency out there. We are seeing that now the Fed needs to increase interest rates. But what a lot of people don't realize is that the magnitude of size of the bond market is like so overwhelming compared to the equities market that a repricing of the bond markets could really hurt the world, right? And so increase rates, you know, and I was like, to go back to the 80s when Volcker raised interest rates to such a high level and put the brakes on our economy, it's almost like that needs to be done, right? But gosh, it will be difficult.
We've painted ourselves into a very small corner because we have so much debt. Our interest rates are near zero. You know, and it does seem like our current administration, what happens in the stock market appears to me anyway that it's kind of secondary, where other people that were in office, I think they wanted the market to be strong. I'm not sure if that's a primary concern or even an objective at this point. And you know, I think it's a pretty difficult road right now. Of course, they're going to raise interest rates. Inflation is crazy. how many more headlines can you have of high 30-year inflation, 35, 40-year highs for inflation? You know, you have to do something about it. People with no money are paying a ton more. People with some money and they have savings aren't making anything on it, but we're all getting inflated way here on prices, gas, housing, food, meat.
Yeah,
right?
meat.
So, but I've been long commodities and really financials for quite a while here, and I think that's probably going to continue. I just don't see it changing too much, but I do kind of think that gold's going to get on the bandwagon here soon. You know, I've heard a lot of, and I've read a lot about gold is no longer something people look at, but then it will be, and then everybody will be looking at gold again. So
yeah, as you're talking, John, I'm going through some of the key tickers that I use to make decisions, and you can see commodities right at the top. Gold in the last 3 months have come up to second, but you know, if you look at the 1 year, the 1 year momentum is super important, right? You can see commodities at the top, real estate, you know, really, and then of course tech, but then you have to pare that down and look at it a little closer to get a feel for what's happening. And then of course gold gets up there, and notice how bonds start rising, right? And then in the 3 month, you could see like really commodities, gold, and look at that. Look at this. And isn't that fascinating?
it is. It's very interesting.
That BIL 1 to 3 month treasuries is number 4 on this board, and this is like a 3x bear leveraged ETF, right? So we ignore that. So look at our top 3. That is very telling as to what is happening. And so, you know, that's why, like, you know, we're trading very lightly, John. Like we used to like put out trades like crazy because it was hand over fist. Let's make so much as we can. And right now it's like, I might do 1 trade all day.
Yeah. You know, and let's say even a year and a half ago, 2 years, up until really almost the beginning of this year, we were trading, you know, nonstop. There wasn't even time to record the trades. We were pumping, you know, just putting so many trades in, have to do a lot after hours. Now it's very selective. But you know, we're really trying to follow the one of our approaches is trade small, trade often. So and right now, when the markets are very volatile and VIX is up 10% again tonight. Look at the XX, I think it's about 10% still.
Yeah, it's I have to switch to TOS here. Give me a second. Yeah, it's at 23.09 right now.
Yeah. Oh, it's about 11% then.
Oh wow. Yeah.
You know, and when there's that much volatility in the volatility numbers, it makes it really difficult for trading because it's very volatile up, it's very volatile down. I've been finding that my trades have been a lot more iron condors. I have no naked positions right now at all. More iron condors, more defined risk. And frankly, I'm doing a lot more butterflies. It's probably my least favorite because, you know, you put up very little money. The chance of winning, you can win a lot, but your probability of winning is low. But that's more of what I'm doing now because it's say a $50 bet to get 1,000.
Right.
And you have a 20% chance or a 14% chance. But right now, anything naked on either side, because it goes down a lot, it goes up a lot, and what you find is you just get twisted in the wind with it.
And for me, I mean, you've seen my trades; they're all scalping trades. Very low time to hold. My win rate has gone down. You know, I once I see it go black, or green, then I'm just out. You know.
Yeah.
And I'm leaving a lot of money on the table. when I'm doing that. Why? Because the volatility is so high that I'm not willing to have a 50% loss on a contract. I'm playing it tight because I don't want that. So it gets triggered and I'm out. Where if I see, it's like on Friday. Friday was a nice trending day if you look at it from the outside, but from the closer look, man, that thing moved up and down quite a bit. And I was on those calls, the QQQ calls. We ended up getting out a 27% gain. But if I would have just had more wherewithal to keep that trade in there, it would have been like over 100% gain on those calls.
Yeah.
But I don't have the stomach for it because
Well, the risk reward, it's always easy to second guess and look in the rearview mirror of what happened.
Yeah.
But when you're there and you're looking at stuff and it's going against you, you might have a winning trade, but then it starts going against you. It's really hard to know. And you have to just say, okay, I'm at the percentage mechanically of what I want to get, 20%, 30%, 50%, move on, right?
Yeah.
There'll be another trade and you move on to it. And, I don't know how long this war is going to last. I hope not much longer, but Swift is the money exchange there, that's drying up. There's other economic issues happening, and so Russia's they're really isolating themselves. Even Germany, who gets a lot of their gas through them, are putting in sanctions. So, but then I just saw something that there was some missile shot out of Belarus. So, it's starting to get a little, you don't want this contagion to happen and start spreading. We don't need to, the US doesn't need to be in a war, or the UK or France or Spain or, anybody else, China. So we'll see how it goes. But even if the war stopped tomorrow, I still contend that there's a lot of weakness in the market. Too much debt, interest rates too low, inflation too high. And the more that you manipulate markets, and I'm not saying illegally, I'm saying, what the government does in the open market committee, buying and selling and currency, and in the bond market, eventually you have to pay the piper.
So John, a little bit of not just to show a little bit of the other side, but I always like to ask the question that Charlie Munger likes to ask, which is, what's the stupidest thing I could do right now, right? And as a trader, that's a very valid question, right? It's like the stupidest thing that you could do with so many unknowns is to go in heavy on a trade, right? Now there, a little bit of the counter is that we give up on everything altogether. It's like, if you're willing to see a little volatility, maybe scooping up some of those deals early and like start moving into those. Even if, especially if you have a long-term portfolio, like you said, there's some nice companies that are down, right? You've heard me talk about Roblox. I mean, maybe it's not a nice company in like value terms. There's much nicer companies than that. But as far as like the future of things, the kids love that game, and they love playing on that. And so to me, it's like, okay, it's trading at 50. It'll probably go down to like 48 tomorrow, right? 47. It's been there. So, if you obviously you got to have some kind of means. This isn't somebody with a small portfolio, but if you have a bigger portfolio, maybe Roblox not for you, but maybe Palantir, right? Palantir is super nice.
That was another, now, and something that people could do, and we'll introduce this at another time, but poor man covered calls, where you don't need much capital, but you can still use options to in the money option sell a covered call. So you actually are having synthetic stock for much less money. But yeah, PLTR I like a lot. I think that's one of the greatest companies out there, and it's trading at, I don't know what it is now, 10?
1147. It had a
Okay.
strong run on Friday, but gosh, it went down. I sold some puts a little while back. I think they were at 10, so it almost hit, but I got that premium. I think we did that trade. I forget. But why wouldn't you sell puts at 8 and they put you? Who cares? You know what I'm saying?
Exactly. And I've been doing a little bit of that, and then I'll turn around and sell covered calls. Now, one of the stupidest thing you could do, and I did it, was I went long on the RSX, which is the Russian ETF, but I went out of the money. And it's a bull put spread. So I want it to go long. So even though it's gone down 20% since I bought it, I'm still okay in the trade. And even if I'm at my max loss, it's a few $100s.
Yeah. So that's the thing. It's like, echoing Charlie Munger. And, the idea is the stupidest thing is to really go heavy, with so many unknowns, because, I talked about low odd events, right? Low odd events would be Putin decides just to pull out of Ukraine, and we would have a temporary super rise in the market, correct? If Putin tomorrow comes out and he's like, hey, I'm out, then we would see the market really take a huge, like a windfall almost. But you and I both know that, okay, so the bearish argument, the bearish narrative is what we're talking about, right? It's like there's a lot of headwinds. The inflation's a serious problem that, a lot of people don't really like gauge correctly. Consumer spending is going to take a hit when you have so much inflation, and consumer spending is like a significant part of the 4-factor GDP equation. And we have lowering GDP. That's not good news for your country, right? So, but the bullish argument is like, Guillermo, we have the infrastructure bill. There is a lot of currency or money running around your economy. It's got to find a place to go. There's all these things. So, it's like, I always tell people, and Jesse Livermore has a really cool rule about, you should never be all one side, right? You should kind of have a balanced attack. I really like the fact that you did go for that RSX bull put, which is, it's kind of how the market works, right? It does what you don't think it's going to do. So there's always this balance. It's like, take your position that's logical, and then sometimes take an illogical position.
Sure. And, and look, most of what we're doing now, we're in cash primarily.
Yep.
It's not ideal long term, but for the short term right now, it's okay. We're trading earnings, and earnings season is quickly wrapping up, but there's some still good companies to trade next week mechanically, and do a little scalping. With the volatility up so high, the S&Ps, Russells, and the pairs between those two, there's some good back and forth markets there. Currencies are going crazy. You can do a little scalping there. Even with interest rates, we did a TLT iron condor last week, pretty wide, right? So we should be fairly safe on that. Now, we could have got more aggressive to make more, but you could lose more too. So I think there's always room to trade something. You just can't at this point. I don't want to get too aggressive either way. Even though my personal bias is more bearish, I think more things need to shake out of this market and our kind of our excessiveness. But we're seeing that. We've seen a pretty big bear market under the sheets, right? Under the covers from the indexes. You see the indexes, but there's a lot of stocks that have really come down hard this year, 50%, 70%.
And it's interesting, right? We both had a conversation about the components of some of these indices that, the big companies are like serving as a lifesaver for the index, right? And the underneath components are really taking it hard. if you look at the breadth specifically in tech, I mean, I'm going to say, I just pulled a number out of there because I haven't looked at it recently, but what, 70% of all the investments are at least down 30% or more.
Right.
PayPal,
right.
look, you and I use PayPal all the time.
Yeah.
And to see at 110.94, 110.50, it to me is like, what?
Are they going out of business?
Right? They're not,
Right.
they're not going out of business. Look at this price. It hit 310 on 7/26 of 2021. And it's now almost a third of that price, John.
Yeah.
That's amazing.
It is amazing.
Yeah, it's a 66% drop, man. Come on.
On a major company.
On a major company. The other one, it just had a nice bump because of earnings, but it's still way down.
Yeah.
Square or Block was hit 289. It was as low as 82, and it's now at 120. I mean, that's a major company.
Yeah, put this one in. I've been watching this, looking for a base. Triple M.
Oh yeah, gosh. Look at this. 150.
And, I don't think they're having any problems. They pass along their prices and inflation to everybody.
They're fairly inelastic. Yeah, this is a fairly inelastic company.
And I'm looking at this stock as a long-term hold, partially for the dividend, but I can't seem, there's no bottom forming. And so I'm not doing anything with the stock other than watching at this point.
Look, if it goes below here, look at the volume profile.
Yeah, where's it going?
Where's it going?
Where's it going?
Where it's a tough spot to trade. What's the other one that I was gonna? Gosh, there was another one that's a super solid company that just really. What was that? God, it just slipped my mind, John. It'll come to me. But these, I mean, the market has been bearish. We have been bearish for a while, and you and I, we've both been waiting for this bottom. But it seems like there's more to go, right? It seems like there's more to go. We see a lot of weakness. It's like IEF is coming up, the 7 to 10 year bonds, TLT. Anybody having a barbell approach to investing, where you have TLT and the SPY, you're doing okay, right?
Yeah,
TLT keeps coming down, so. I don't want to belabor the point, but I think as traders, what I want to tell the people listening to us in my piece of my 2 cents, right? Whatever my opinion matters, is that, hey, just trade lightly, trade small, right? Try to trade as often as you can. It's okay to not trade either, right? It's okay to be out. It's just sometimes it's like, if you can't see what the market wants to be doing, then it's good to stay out. And so as a background, I like to tell people this is like, if somehow the bond market can get demand, right? And the bond markets get demand when the equities markets are in trouble, then it could somehow support the rate increases. If I'm I think Jordan Peterson calls it archetypical type of person, and what that means is kind of like the, lack of a better word, overseer of the game. Then what I would be doing, or what I would be trying to promote, is that in order to stave off like major catastrophes, like through inflation and this money push and all this stuff, is that I want to try and move people that are in equities markets into the bond markets. And why is that? Because it creates demand. So as the interest rates go up, bond prices go down. But if there's demand, it'll support the price of the bond, and we won't get the serious losses. So that's just something to think about. That's my opinion. That I've seen it observed. I've observed that before, and you can go in the charts and see when there's downturns. Gold has done that in the past, but I don't have confidence in it doing it again.
Yeah, gold has been one of those things that's been very interesting to me, because it really hasn't caught a bid at all. And it does, if it does for a day, it doesn't for 2 days.
Well, the second it spikes up, it breaks your heart.
Yeah, exactly.
I mean, I mean, I have, you know, you and I have talked at length about how giddy I was when Biden won, and I went all in on gold and silver instead of copper and lumber, and I lost my shirt, right? Because that thing's turned down instead, and I'm like, you're printing. What's going on here? And of course, it's like there's even the wisest of us. Sometimes I'm not calling myself wise. I'm actually kind of, you know, sometimes you make the stupidest mistakes, right? It's like, I noticed that stop losses, I noticed that targets, and guess what? No, man, go to the moon, and you know, it took me out to the woodshed, you know.
Yeah, yeah.
You know,
So-
but still, my theory was still right. Inflation's coming, and it's just I put in the wrong assets. Had it been lumber and copper, it would have been you know, sitting in Hawaii maybe.
Yeah. Well, lithium's been a real good play too. So yeah, so you know, looking forward to next week, my game plan is it's going to be a similar trade small, trade often. What I used to do at 25 delta, maybe I'm at 15 delta, 12 delta now. I'm spreading out. I'm taking less risk. That means I'm making less money for that risk, and you can feel that when we look at our monthly or weekly tallies, you know. So, but at the same time, you can't. For me, I'm not going to go in heavy and lose my shirt. So you got to be. This is a long-term game, so you got to take it in bite-sized pieces. So this coming week, I'll be trading volatility. I'm sure. I know there's going to be some more butterfly opportunities. There's earnings, several good companies with earnings. It looks like volatility is up, and this is, we're kind of in a dangerous spot where I like volatility is better around 20, 25. When it gets above 30, bad things can happen quickly.
That's absolutely right.
So, and I think your approach that you've been using, the scalping with NASDAQ, Russell, S&Ps, and I like to do that in the futures markets. It's a little more pure than trying to do it out of like the SQQQ, I've noticed, but I'll do both. I think that's where the opportunities are going to be this week.
So just to, you know, as we close here, I didn't want to belabor everything, but I'm looking at the NQ here, the futures. You can see that we're at value here on the daily, and it's really close to this fib. So if you wanted to play this short, right, then really your stops would be at around, I would say 13,952. And so you could place that stop there, and you maybe can anticipate a move down over here to 13,437. That's a nice move. And so obviously you got to have the portfolio size to trade the NQ, but you could also do the MNQ and not take as much. You take a tenth of the risk.
Yep.
And so maybe you can withhold. Now this is on the daily, right? This is a day. This is a longer term, which I'm not doing, by the way. I'm not doing these longer terms here. And maybe you can trade it with options, and you can sell some calls because you expect it to go down. So you know, we like to go out at least 21 days. So we go to April. You know, you can sell some of these futures. And, you know, obviously there's a lot more technique to talk about, but, you know, a bear call spread on that would be okay. So anyway, that's basically, you know, what the charts are telling us. You know, I didn't want to, you know, stay too long. You know, the ES is similar proposition, but it is right above the fib. We're not at value. It could move up or down. Obviously, what I'm thinking is coming down. So if it defeats this value here, then we're rolling downhill, right?
Yeah. So anything else before we sign off? Man. Okay. Yeah. Looking forward to another great week. Stay positive, trade small, trade often, or as often as you can. Visit us at optionstradingpilot.com and come join us, take a free peek at us on Discord and watch us trade.